Hi, my name is Felix Fry.
And I'm Marko Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marko Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix. How's it going?
How are you, man? How you
Good,
doing?
how are you?
Can you hear me okay?
Yes, perfect.
All right, good. Are you ready for today? It seems like there's a decent amount of stuff to talk about. I'm not sure we got the huge stories, but just looking at things, it's some interesting stuff, I think. So I think it'll be good today.
Yes, definitely. And I'm seeing some higher level plays that I don't really understand. So you're going to help me with some of those.
Okay, but yeah, that's what I see. I kind of see a
spreads.
few things.
Mhm.
Yes, I see a few things. So why don't you
Cool.
shoot? Why don't you shoot what you see
All right.
quickly? And
I see one I like. I see one we talked about before, and that's ZNGA.
yes.
And in particular,
Yes, I
let
did
me
see
tell
that.
you-
I did see
Mhm.
that.
There's
Stock
some
was
action
up.
for
Stock was up
earnings.
good. Yes.
Yeah.
Okay.
Yeah, and there's some earnings action if you want to show us
All right. So let's see.
your screen. Okay, cool.
Let's go here. Okay. I'm gonna blow this up a little bit. ZNGA, right? Z. There
Yes.
it is. Okay. No. ZNG. Oh, it must have came off.
ZNGA.
All right. So let's go here. ZNG. I saw it earlier today. So stock a little bit higher too. Oh, okay. So it's come down. It reached $11. Okay. I saw it around 265, 270. Okay. Yeah, there's a lot going on. I mean, look, this is right in the heart of what we look for, right? It's big user base, growing user base. They've made an acquisition, getting into these hyper casual games. The stock the company has issued convertible bonds, which is basically convertible bonds at zero interest rate. Is basically you're buying the call option. So they bought $750 million worth of out of the money call options. One thing that's interesting, if you read the press release on that, they were not only were the investors buying call options, out of the money call options, spending a lot of money, almost $1 billion, that's $750 million. The company, which was interesting in the press release, you could see that the company also went into transactions with the investment banks. They wanted to buy the upside call, right? So they were willing to sell $750 million to investors. Okay. But then they said, we're going to take that money. We're going to take your $750 million and we're going to take some of that money and we're going to buy the further out of the money call option because we don't want to give up all the potential.
Mm-hmm.
Does that make sense?
Yeah.
So they basically sold a call spread on a good part of position as opposed to just selling calls. So it sort of shows you that ZNGA as a company believes in themselves. They believe they should be valued at a lot higher valuation because they were scared to just give it away and they wanted to actually buy the upside calls. And then, it sort of makes me think that it was a little bit of a reverse inquiry where ZNGA wants, and we talk about this a lot, these companies, they need support. And what I mean by that is they need the big boys to be buying their stock. Okay. And the big boys aren't going to buy their stock unless they are going to make a lot of money, not on them just buying stock, but if they can get a lot of stock at a cheap price, cheap valuation, and say, all right, we're going to be able to get in at this price. And then we'll buy your stock and then we'll make all your executives rich, but we'll also make a lot of money as well. And then we'll go on our merry way and then we'll do it the next time wherever everybody goes. So that's sort of what it felt like when this big convertible bond came in. The stock has been trading well ever since. Earnings are coming out in a couple of weeks. I have no idea about what the earnings are going to be. I guess people are playing it here. They might be switching around the risk reward, but with the stock trading well, it did come off. You're seeing the 11 calls. This is the one you're looking at, right? The February 11 calls?
Yes.
Or were you looking at they're all over the map, by the way. Yeah, they're all
Yeah.
over the place. So, I think that maybe the story's getting out, or maybe they just got support, right? That's what these stocks need. They just got support. So the people who bought $750 million in call options, you better believe if they're buying those 12 and whatever they were, $12 call options for 2025 or whatever it was, they are also thinking at $9, I need to be buying the stock as well. So they're taking the stock up. They're behind the stock. They're pushing the stock. And there's call buyers now. So there's call buyers you see in April. I mean, let's look at the earnings first. Let's just see the earnings. Although this one's interesting. See, let's the April 12s at 65 cents. So it's the April 12s, and we see actually, just so people see it, the April 12s, the April 15s. It looked like there's something going on there. I don't know if this is a call spread on half or whatever, but let's just take a look. So we see right in the get-go, stock opened up 1020 and zoomed to 11. So it looks like these call buyers, or this call buyer, okay, came in early in the morning and he was able to buy some stock, and it zoomed higher on basically him buying, what looks like 6,000 plus 7,500 over, let's call it 20, 30 minutes. He bought 10,000 calls, okay, over 20, 30 minutes. And you can see what that does to stock. That at 9:30 in the morning, that's 10,000 of these calls. 10,000 of these calls are probably close to, let's see, you can just use this, 27 probability of being in the money. Call it 250,000 shares on 10,000 calls. If they've continued to buy the calls, it's another, decent amount of stock. But there's not just this line. It's not just this line. It's also the Feb line that they came in. Go ahead. You have a question?
Why do you think they would choose April over Feb or both?
It's a great question. So let's take a look at let's take a look at what we're seeing first. So the 11 and a halves in Feb 19, and then you have the Feb 5s here. Feb 5s, 11s. Looks like they bought these two. They're getting involved here. So they're looking for obviously good earnings here, and they're coming after it. They had some game launch yesterday, I believe, in South Korea. That probably went well. But I think what you're seeing here is setting up for a good earnings report. And your question is valid. Why not just buy the February 5th, so the February 19th, or the March 19th? What's the difference? And I would say, is this a bigger play? So we know what they're buying. Let's go in order. Let's go with a big one that we see here, just so we have something to work with. Where's the one that they were buying?
The biggest one, February 5th. Yep.
February 5th. Okay. So February 5th, they're buying the 11s. So to buy the 11s, you're talking about, let's call it right now, 50 cents. Let's call it 13 bucks. 13. Okay. So 14 bucks. Okay. Yep. So $14 is sort of where they're looking at. Depending on when they bought it, let's just see, they bought these. They've been buying a chunk here with the stock trading 1080. No, here, sorry. Okay, so most of it was right here with the stock trading on average around 1080, right? Somewhere around here. Okay. You agree? 1080? Okay, so 1080, the stock is trading 1050 now. If they're buying the 11 calls with the stock at 1080, that's going to be probably about a 30-40 delta as opposed to this. So let's call it 13 bucks. Okay, they think $13. They think in 13 bucks, and that's why they're doing that. And they can make, $13 would be, if this would be worth $2. And what did they pay? Do you remember? What did they pay here?
I don't remember.
38 cents on 15,000. 50 cents, 50 cents, 50 cents. Okay, so they paid on average, let's call it 43 cents. 43 cents to make. If it hits 13, it'll be worth $2. Okay, so 43 cents for 2 is $1.60. So it looks like let's call it $1.57. So 157 divided by 43 cents is what? Is about almost 4 to 1, 3.8 to 1 or something like that, 3.75 to 1. So 3.75 to 1 is 375% if it hits 13. For whatever reason, that's what they kind of need to look for, but I'm sure they'll be happy making 200. If the thing hits, 12 and a half, you still make on a 43 cent option on average, you're still going to make $1.10. You're still going to make 200 and call it 250%. So
Mhm.
call it 12.5, 13, they'll be happy, but they're thinking in that range. Now, so that's context. So now let's go to stock chart. And what do we want to do? Zynga.
Yep.
Okay, let me put my inspect here so you could see. Can you see that okay?
Yep.
Let me just put this, maybe make a little bigger. How about now?
Yes. Perfect.
Okay, so here's Zynga. You see what happened here. So now let's make it actually, we're gonna annotate it. So look at the level. I mean, this is, I mean, anybody could see that, and you don't have to be a rocket scientist to see that this is for whatever reason, this is a level that people say I want to sell it, right? They
Mhm.
sold it once, they sold it twice, and we're here again today, and look where they went through, and now they've sold it right to this level. What you'd like to see is a move above this, and maybe it takes, it just came from 9.5 to 10.5, which is a decent amount. It's 10% move in 4 days. Maybe it takes a little bit of time, but this, if we just look, okay, so this is taking 6 months view, but if we just take this view right here, it went from, let's call it 7.75 to 10. That's 2.25. 2.25. If I did it from 2.25 from, let's just call it 9.5 to make it easy. So that's 2.25 would be 11.75. 11.75 right now is where I'd say it would start getting toppy again. They think it's going to 13. So now I'd have to, I'd say, okay, who am I to say that they're wrong, right? They know what they're doing. Let's look at a weekly, and let's just expand this out and see where this has been, how it got there. I'll just take 10 years just to see Zynga.
Their old time has been 1460, something like that.
Right. So you're seeing this thing trading up at 16 around here. So this is a huge, huge fall in 3, 4, 5 months. This is from here to here. This is when Zynga, what happened here? Zynga was thrown out of Facebook, basically. So Zynga was making all this money on Facebook, and then Facebook said, nah, it's not going to work the same way that we was working before. So this was the struggle with Facebook, and then they struggled for many years, and now it's coming back up. And I think that, this is so many years past already that the real story is here. And this looks like a pretty damn good chart, like 16, 17, it's growing, has some trouble here as, stock went from 3, 2.5, 3, 6 to $10. It's trades down to 8 on, I guess there was some worries on Apple. I had remember hearing something about like Apple changing their policy and that affected the gamers and the game providers. And
I think you have to like pay through Apple to get the freemium stuff, something like that.
Okay, so it just made it a little bit more difficult for the game providers. But they shook that off, and people, they're buying. You're talking about $750 million that's betting here, thinking higher. Granted, 4 years, but you know how this works. I mean, if it catches a little bit of fire, if this is a good earnings report, if you're talking about hundreds of millions of people on their platform, what does that mean for the future? I'm sure people are thinking about advertising and how advertising is changing, right? How it's you have, I don't know how many billions of dollars on, what we would call Madison Avenue advertising, billboards, regular TV. Things are changing, and they're changing pretty quickly. And so, there's the more users you have, ultimately, the better you could be able to monetize them if they're actually users on your app or on your games or on your streaming service or whatever it is. So the game is changing. There's a lot of money up for grabs. I think these guys are right in the heart of it. They got a lot of trends. They got the social media aspect of some of the games that are out there, although I don't believe Zynga has that just yet. But the social media aspect, you have number of users, hundreds of millions of users, eyeballs, right? You have time spent on these machines playing, which is great for advertisers, and you have this trend of just gaming in general. And I think this is one of the bigger gamers out there with a public stock. Not in the sense where it's the competitive games that like we talked yesterday about the Call of Duty and the War of Worlds and all that stuff, but nonetheless, it's gaming. And so I think there's a lot of potential here. We got to get to this level. You'd like to see it in good volume and people playing the earnings. So can it get to 13, 14? Yeah, I mean, look at where it was, and maybe it challenges that. And there's, there's a lot of money betting right here, billions of dollars, granted over time, but you better believe if they're betting call options here, they're buying stock here, right? If I'm buying 4-year call options here, saying, yeah, I want in, I'm going to also buy the stock because I know me buying 100 million shares over the next 6 months is going to push the stock probably to 16 anyway. Right. And so these are the types of this is what goes through, their mind. It's the fact that they got, just like you see in the options we show you, they buy, there's call buying and then the stock goes up. There's put buying, or, they're setting up quantum scape. There's this setup with, options, and then the stock drops. So it's the options oftentimes comes first, right? They're willing to get those options at a fairly cheap price, knowing that they're going to have millions to buy, and then the options come valuable. And by the way, the options have what's called gamma, and gamma creates the investment banks to start buying when it gets to that level. So you get buying on top of buying, and that's the way to some extent you could think about the game. And we'll see that later today, because some of the stuff that I'm seeing now are these setups. They set up with the option. I always talk about this. The big guys, they're using the options to set up, and then they're trading the stock around it. And many times you're trying to find the situations where they set it up because they're about to get long stock or buy into it. Okay, so the setup is going to make money over 6 weeks because they're pushing it. Anyway, so that's what I would say to you on Zynga. This is obviously bullish activity. They're playing the earnings. They're looking at April because it's potentially a longer type of play. A bigger trend, a bigger move. And I think it is a longer story, a longer term story. It's, people are betting on 4-year options, 3-year options. This is something that the big boys think it's a good, it's going to take a little bit of time. We like it. And we think, and within 4 years, we're going to make a lot of money on this. Okay.
Cool.
Good. So that's
like
Zynga. Yeah, that's Zynga. What else?
Did you
How
hear
about the big news? The big news.
Right. What's her name?
What's her name? Oh, just the Treasury of the United States of America.
Right. Janet Yellen, right?
Janet Yellen. Yeah. Oh, just her?
Yes.
So she says that basically Bitcoin is for criminals. Basically, right. I mean, that's what she's saying. So it's just insane how you have very powerful people on both sides of the fence. But I would say that I'm more inclined to listen to a Janet Yellen than I am to Jamie Dimon. Right? Jamie Dimon is. Let's see here. Jamie Dimon is, saying it goes to 20, saying it's a fraud. It goes to 2. Then it turns out they all get long at 40,000. He's saying it's going to 150,000. And then it just happens to be a few days before basically everything comes down. Now, what's her name? Christine Lagarde from Europe, DCB. She comes out saying, sort of making negative comments. The best comment was from Warren Buffett, who basically said you should get short suitcases because the thieves, won't need to buy suitcases to carry all the money anymore. So you should get short suitcases. I thought that was pretty clever. And then you got Yellen coming out here saying the only reason people use it is for, that same rhetoric. It says something about like what the powers be. I'm more inclined to listen to, again, the Christine Lagarde, the Yellens, the Janet Yellens, because they're policymakers, right? They actually make the policy. And if Janet Yellen has this strong thought, and she's the Treasury Secretary of the United States of America, I mean, I'm going to pay attention to what she says. And when I hear JP Morgan's Jamie Dimon yapping, 150, after he said it was a fraud at 2,000, I'm a little concerned by what I would say. I don't know if I'm going to buy what Jamie Dimon says, but Yellen, that's the face of monetary policy, besides the Fed, right? I mean, she's the face of Biden. Biden is elected her. She doesn't really talk without, having, especially on day one. She doesn't come out on day one saying something that she hasn't talked to the president of the United States saying, hey, what do you think about this, Bitcoin? Although Biden's probably got a couple of Bitcoin as well, going, well, I kind of like Bitcoin, it's like has a little thing with, $25 million maybe. I don't know. But at the end of the day, she's not going rogue on day one. This is a policy statement of the Biden administration. You got to be concerned about that. And the market is concerned, right? So we're seeing, the riots, the MARAs, right? Anything associated with Bitcoin sort of under pressure. And I would say, let's just look at the chart of, which one? Let's just start with RIOT.
Okay.
RIOT. Riot does nothing for, for years. Okay, this is Riot. Just want to make sure I'm making my screen bigger for you guys to see, but I have trouble. Okay, so Riot 2017, this is the Bitcoin move. Okay, so this wasn't the Riot that we know. This was like a new company formed here, billionaire out of, I believe it's Vancouver, out of Canada. Bitcoin goes way up and Riot screams, okay, and then it comes straight back down, okay, and I think a lot of executives were selling here, but essentially Bitcoin does nothing, and then we're up again here. And what I would say is, to get us a lower view, is this is the perfect reason why, if you're going to be this long-term holder in Bitcoin and you're never going to sell, then I understand, this is going to happen 29 to 19. It will happen. If you are not that person, and you have to understand, if you are that person, okay, let me look at this and just do daily. You have to know who you are. If you're a Bitcoin holder, I guess it's Hodler, HODL, whatever they call themselves, and you hold it from $500 to 20,000, and then you hold it from 20,000 back to 2,200, and then you hold it from 2,200 to 40,000. You have convinced me that you are a holder. Okay, you have convinced me that nothing is going to scare you out of this, and you're not even going to look at it. But I got to tell you, as many people that would say that they're a holder from $500 to 20,000, all the way back to 2,500, 2,300, man, you're a true believer. Like, if you held that and you didn't even flinch and you're just like, it's 10-year trade, like, kudos to you. Like, that's, you believe in this, and I have, who the hell am I to tell you get it right or wrong? I'm not here to do that. But most people are not going to be able to do that. Okay, you see something go from 500 to 20,000 and 20,000 down to 8,000. You're probably going to say, you know what? I don't want to. I just made so much and I gave back already half. I'm going to sell some. I'm going to sell. Goes to 6. I sell it all. At 2, thank God I sold it all. Maybe I should buy some back. Whatever. You're not this long-term believer. You can't say you're this long-term believer in Bitcoin. You're a guy who, or a man or woman who believes in the story and is willing to sort of, come out of it. Because at some point, the believers, the holders, the ones that take it from 2 to 20 back to 2, or 500 to 20 back to 2, the holders, they believe it's worth $1 million. Okay, so they don't worry about, who cares about 40 to 31. I mean, nobody cares. Who cares, right? That's a true believer, and there's no argument there. But what I'm saying is that it's very hard to be that person. And if you're looking at this chart and you just made 2, 3, you took it from 2.3 to 29 in it, and you just lost $10, which is, so 2 to 29 is 27. So you just lost 25%, call it 25, 30% of that move, in 5 days. It shakes anyone. It could shake anyone. And, you might see that come off, and then there's people that say, no, but I'm a believer. This is the first move. I'm a believer in Bitcoin. And then Bitcoin goes from 30 to 20, and 19 goes to 10. And now you're asking yourself, am I really a believer again? Right? But you just took this ride from 2 to 20. So this is the momentum game. And this, to me, looks a little bit like a mountain. Okay, we talk about the mountain. It looks a little bit like a mountain. This is a tremendous move in a period of 7-8 weeks. Okay, we're talking about November 17th to, it's only 2 months. So it's about 8-9 weeks. And you went from $4 to $29. That's a tremendous move in a stock. And now it went from 29 to 19. This could come back. This could be that first peak, but this is a damn good peak here. Okay, and it could trade, again, the shorts probably has started, the minute they probably got it here more aggressive. See this move, 1 down, up, new high here, gap down. They probably got a little bit more aggressive here, the shorts. Here, nobody knows if it's going to go from 25 to 40, right? But here on this gap down, it was weak, and then a gap down. You have this moving lower. So I think the shorts get a little bit more courageous here, and they probably cover a little bit here, small, and probably look to buy back 15, 16 on that position. But there's no doubt in their mind, they're thinking, okay, it could easily get back to 24, but I'm going to start leaning against sort of 24 to 26 now, right? So that's where they get, again, more courageous. And you see it over and over in any one of these mountain that we call it type of trades, okay? Because this is just a picture of momentum. Same thing, MARA's going to have, I haven't even looked, but I'm sure it's going to have the same type of picture, okay?
Yep.
Same thing. It might as well be the same thing, right? And it's a few weeks, and this one went from 2 to 28, and why not, right? And again, the people it traded 16, so this wick here is basically telling you that it traded into the 15s, and now it's trading back at the high, so it's recouped some of the daily open down, now up. The buyers are stepping in, trying to say, no, we still like this name. I'm telling you, you get another $5,000 move in Bitcoin in the mid 20s, and this trades 10, and people panic, and maybe that's what drives it to like here. Okay. But in the meantime, it could just literally do a zigzag of 17, 20, next stop 13, 12, back up to 15, back down. So we might be on the other side of the mountain. I'd be concerned. And I would say certainly at 21 to 23, the shorts are going to be more aggressive, getting back in, trying to, they're leaning against 28.3. That's your mark right now, $28. Gets to 28. This thing could fly again to who knows where, but it's got to get through here first, because they're going to get more aggressive here.
Okay.
Is that fair?
Yeah.
Okay, so I would say that, these when it started, this was an options play. It's a $2 options play. It paid off handsomely. Okay. People should have been, you can even see the chart, $2 goes to 6. So it's 200%. People are taking some off. You could see that they're selling some stock, and it comes up here, goes to 11, 12, 13, 14. They're taking some stock, and here probably people a little bit taking some stock too. This is 1, 2, 3. And, that's how you should be taking things off. You shouldn't just be like, oh, unless you're this believer that will hold on forever. Okay. But I'm telling you, I would bet against 90% of the people are true believers. Then if you're not a true believer, then you should be taking stuff off. That is the right thing to do.
Yep.
Okay.
Definitely.
All right, good. So I would just say, yeah, that's the Bitcoin. I mean, the story's been going on for, obviously the last 8 weeks, and stocks have gone with it, but at some point you gotta risk manage it, and I think that's probably the lesson throughout the day is risk management, because I see a lot of stuff that I've been looking at is sort of risk management today. What else?
I mean, I've seen some big tech, but before we go into that, let's revisit Ford. We talked about it yesterday, and today.
Who was that yesterday? Who was that? Gutierrez, Ray, somebody said
Ray. Yeah, I think so.
Rivian. Yeah, I think it was Ray. Good job. It was a good job yesterday. Man. He pointed out that Rivian. I think even Kramer talked about it. Here's the issue with Rivian. The only issue I have. So looking into it, people are getting excited. Everybody's talking about this new jewel that Ford has, just like GM. The problem is that Rivian may not. Ford may only own like 10%, 15% of Rivian, whereas General Motors owns like 60 something percent. It's a huge, it's a much bigger deal. And so, the stock being up 7% today is probably up. Market cap on Ford's got to be close to 40, 50 billion bucks. So, and it was up a little bit more before. So call it 10%. You're talking about $4 billion just on, and it was up from 10. So you're talking about $1.70 move on. You're talking about almost a 20, let's call it 20% move on the stock. And that would be about $8 to $10 billion. And Rivian, if they only own 10 to 15% of Rivian, and Rivian is valued at 30 billion, for Ford, it's a $4 billion valuation. And the stock is already up 8 to 10 billion. Now, it just might be momentum and people getting excited because, of what happened to GM. I think GM has a bigger stake in what people think Ford have. Not saying that Ford's not going to be good. They have, there's an analyst that came out saying that they liked it for earnings. They liked it for the new models that Ford was bringing out in EV. And they liked it for, what was the last thing? They liked it. Oh, I guess there was a investor meeting, capital markets meeting in the springtime. So those three catalysts over the next few months is what they were saying could sort of unleash this bigger opportunity in EV, right? Ford sees GM do it. What does Ford do? And what are investors clamoring probably at the Ford CEO? Hey, you see what GM is doing? Flying Escalades. Go put out in the capital markets. Put out like, Ford trucks in space. Like, do something. Do something to make it so we're not this old factory. So do something that is going to stick in people's minds that Ford is not a union factory generating clunks of steel. I mean, show them something, and maybe people get excited about that. So this is something you and the community brought up yesterday, and we're talking about it. I mean, it's hot right now. I mean, what can you say? The volatility is up here. Let's take a look at what they're looking at. They're looking at earnings, and they're looking at the 12s. I did see these here. This was let's see here. These look like spreads, so it looks like someone might be selling the 15s. Okay, so they might be selling the 15s, and they would be, as a spread, they're selling the 15s at 13, 14 cents, which I don't know why you would, because in a momentum name, selling 13, 14 cents options is probably not the best way to do it. If somebody came to me, I would say, why would you sell that at 13, 14 cents? Like, that's just ridiculous, especially 50,000 times. I mean, to me, that's what I would say to a client. Somebody comes in and wants to buy 50,000 of these, which looks like what they did, 25,000, and they're still buying. 61 vol. Paid, all right, so paid 64 cents on a 61. Paid 64 on a 61. Okay, so this is something where, this is interesting, right? So this is something where it could be a buyer. It could be someone that I have to look to see something for a second. Okay, so you see this right here, 3-month bull bear. You see this, Marko?
Yep.
So I did this to oh, Siri. I love Siri. They just listen to my they see that? It's like we did that live. They're just listening to us. Anyway,
they know we have some good ideas.
They know what's going on. Like, what's going on. So Ford, so you see this right here? This is important. So this is skew. So the blue line would start here. And by the way, I think sometimes I think I'm dyslexic, and maybe all of us are a little bit, but I always do think I tend to want to see the bull here and the bear there, but I could switch it. The blue line basically starts from here and goes this way. So when this is bullish, when the blue line is here and it's bullish, then this is saying that skew, the concept skew, is low, which means that calls are in demand versus puts. So better in demand. It's like a seesaw, right? So calls are better in demand right now. And so that's what this is showing for 3 months. So if you look out 3 months, March, June, or whatever, and it'll reflect similar in February. But, what it's basically saying is that these are, on a volatility basis, they would be higher. Now, practically, that's theory. Now, practically, they're higher, but how much higher? The difference between normal might be 16 cents and not normal, what it is right now, skew being low, would be 19 cents. So if someone's looking at a volatility plane saying, oh, well, this is where a lot of times customers would come in and they'd have big trades to do, and they would say, well, the volatility skew is in my favor. And I would say, don't look at that. Like, you're trading direction, and the reality is that it's in your favor by 3 cents. So you're going to do 50,000 options, call spreads, because the thing's in your favor by 3 cents. And the reality is that it's unlikely you're ever going to cover those 15s, and you're going to have to pay the bid offer, which is probably a penny, 2 pennies anyway. And there goes your edge. And so why do that? And if this thing catches momentum, it goes from 11 3/4 to 14, 15 by wherever we're call it after earnings, you're going to be saying, why did I sell those for 18 cents? So I don't know why somebody did this. I don't particularly like this trade just to collect that 18 cents, but because this is high, people would use this strategy of buying the 12, selling the 15s. So this would be 54 cents. So they're paying 54 cents for the 12.15, which is $3 max. So call it 50 cents to make 250. So close to 5-1. Okay, if that's the spread they're doing. Okay, so it looks like they're selling these, and we can look all day to try to figure out which ones they're doing here.
Right.
10s. Open interest 36. I don't know what they're doing here. It's probably some sort of, they've just been trading all over the place on these. So it's very difficult to catch. But at the end of the day, you're being guided by implied volatility is going up. So the prices of puts and calls are going up in general. The board is higher. Okay. When the board gets higher and skew. So what this trade tries to take advantage of high volatility and low skew, which is bullish. So they're trying to say high volatility. So I want to sell. In general, I would like to sell something. So they find this one to sell. And because the skew is bullish, which means the calls in demand, they say, okay, well, let's sell these. The volatility is a little high and skew is low. So I can sell some of these and then I'll just buy the ones that I really want, the 12s, but I can get a little bit of a discount. That's probably the thinking. So for people are bullish, they're betting here. Yesterday, I thought it was, and I did see I think it was these on the 11s. One of them, the open interest actually went down, and so you saw that it looked like they were buying to cover, which we said that they were. But today it looks like it's more of let's just get long this stock. So keep that in mind on the Ford.
Okay.
Good.
Yes.
How about big tech? So over the last week, I've been seeing more and more big tech. I don't really, it's hard for people to buy options in the big tech names because the actual premiums are expensive for one lot. But I've been seeing in big tech, Apple's, you pointed out yesterday to me on the side, Apple call buying, and Apple's up big. Let's look at it. Let's look at 3 names that might as well be the same names, right? Might as well be the same charts. So we know Apple chart, it just goes up every day, right? But let's look at Microsoft, because I saw some Microsoft call buying yesterday and it had a big jump. Okay, so I like this chart. I mean, Microsoft has not done anything over the course of the last 6 months. Okay, you're talking about 6 months of doing nothing. 1, 2, 3, 4, 5, 6, going on 7 months now, doing nothing. And it's starting to reach this level, right? It's pretty clear, 225, 230, 232. It's pretty clear this is a level where people were taking some profits. But you have this, what looks like, I'll just draw it for you, what looks like a very large, okay, you can do this if you'd like, but it's like a very large wedge, however people want, bull wedge, bull flag. I have no idea. I don't pay attention to that. I just look at the charts. So this pattern here, okay, is telling me earnings are coming up. And if this thing comes out of earnings, this thing could actually make a pretty decent move, right? Good earnings could take it up. So today, I've been looking at this, and they've been trading Microsoft options for a couple of days now. What's going on here? Let's see here. So you have January earnings. Let's just see what they're doing in January earnings. So this trade here, the 225, 235, it looks like this, I do see 11,000 here. So maybe someone was long the 235s before, have been long, and now they're just rolling it down. But it looks like it was a spread.
Yep.
Okay, so we have 11,000 at 1030. And let's see where it was. Let's just go this way. They paid $449. Okay, $4. So call it $450. They paid $450 and they sold it at $1.50. So right around $3. Okay, so right around $3. So they paid $3 for a 10-point spread. So what's the max it could be? It could be worth $10. Okay, they paid $3. So 3 to make 7 is how much? 2.33 to 1. So 233%. That's what they're targeting here on a move to 235. Now, because I don't think they have the actual spread on. I just think they thought that was good value. Okay, think about what I'm saying here. They were long the 235s. This is an outright play because they were long the 235s. Okay. They wanted to say, okay, well, we don't want the 235s going into earnings, which are in the next week. So we don't want the 235s. We want to give us a better shot. We'll take the 225s. This trade is a loser right now. So let's roll it down because there's better value in the 225s. And where are they thinking on the 225s? They're probably, let's just think about 240-ish, 225. So 237. Okay, so you look at the 237-ish, for the 225s. Yeah, 237-ish. Let's just call it 237. And if you have the 235s, before you were thinking a lot higher, but I don't know what we would have to look to see when they bought these 235s. But it looks like they had bought the 235s and now they're buying the 225, 235 call spread because it offers better value, because this 3 to make 233, 2.33 to 1 or 233%, if it goes beyond 235, looks enticing, right? If you're going to do a call spread, you probably want to see that somewhere around 250%. So they do that to actually move down the strikes, because to win with the 235s, you're going to need something closer to 250, and that might be asking too much for Microsoft right here. Although I have to tell you, I think it's potentially explosive, right? You have a move of you get a range of 230 to 200. Let's just look at the actual where it was 195-ish to 232. I hate when I do these. I don't like doing too many. I don't like doing too many
lines.
Mm-hmm. It's, if it confuses me, it's got to confuse everybody else. Okay, so should be simple. You just say, okay, 232 is the high. 196 is this other range, 200. So we'll call it 200. 200 to around, let's do it right in the middle, 230. So 30-point range over basically around August, 6-7 months. It could go 30 points higher, 230, 260. Why not? On earnings, maybe not. But, can Microsoft move up 8%? Well, 8% is almost as $18 move. So this could trade 245, and all of a sudden that 235, 245, or 225, 235 is pays, and it pays handsomely because it actually goes to 245. So this is somebody setting up for a great earnings report in Microsoft. And I've also, so now we looked at Microsoft. You can look at, so that made me look at, because I've been seeing Amazon trade fairly well and seeing call activity, and you got the same chart. You got these big cap names not doing anything. And I can tell you that, the MACD's pretty low and starting to turn here a little bit. And, can I see this try to move up towards this level on the MACD? Can this thing move up? And if that moves up, what does that mean for this potentially breaking out? So this is what I am looking at. This is something that I think is interesting on the big cap names. And what does that mean for the market if it breaks out? And we are seeing, like, this was good volume. It wasn't like it's not like this is floating up on not so good volume. This is floating up on, Amazon good volume, and today's probably going to be the same. Microsoft. Let's look at NVIDIA, because 3 charts that I think look fairly similar. And I'm seeing call buying, and people said, similar. I mean, same type of thing. Okay, they're one and the same. It's you call it the fangs, whatever you want to call it, the same thing. Okay, call buying, same thing. MACD, all positioning, very similar. So you have these things looking like, wow, if the earnings, you saw what Netflix did. Okay, same thing, right? Before yesterday, same thing, and look what it does. Bam, straight up here. And this is a new level, right? This is a new stock. I call this a new stock. See that? How many? Yep. 33 new stock. Not only I say it's a new stock, it's the analysts. All the analysts have gotten bullish here. So this is a big dollar amount in exchange of hands. Either people selling, on a big move, but this is the first time, the way I like to think about it, to give you some perspective, this is the first time 32 million shares traded up at 585. It's first time ever. And that means that there's potentially big buyers up there that think they're not buying there because, it could be the shorts getting killed, and we'll have to figure that out over the next couple of weeks. But when big buyers step in at this level, they're not, and for the first time, they're not thinking that it's going to 610. I mean, they think, okay, this is $1,000 stock. Maybe not tomorrow, next week, but you got to start thinking that way. First time, 32 million shares trade at 580, 590, 590. First time. So let's see if it holds. Let's see if we got to see if let's call it right around 560, 570. That area, we want to see it hold. And you're going to see it. If it bounced back off 560, that means those 32 million actually were real buyers, new buyers. And, they liked it at 580. They're going to love it at 560 because they think it's going to 1,000. That's how you have to read this breakout. But before yesterday, it was the same chart as the other ones, right? How about Google? Google actually looks better than the other ones because this one, didn't take 6 months. This one took 3 months, breaks out again. And, we want to see it hold. You want to see it hold. So you're probably, as if you're a stock trader, you're thinking, I want to be long above 18 and a quarter, maybe like 18 and a quarter. I want to see the buyers step in. The buyers stepped in. See, there's the buyers on that day. The buyers were in there 8 and a quarter, 18.75. I want to make sure that they're there when it goes down, because if they were there buying here, then this is a layout. They should be buying more here. If they're not, then there's something wrong. So what could go wrong with some of these names? I mean, there's always this whole Biden talk of how he's going to be strong on the tech names, and maybe that's the case. But right now, something like Google is not saying that. Google is trading up. So those are the names that I would, on an Apple, I'll just show you just to show you. But it's looking at resistance here. The stock is tremendous. This is, everybody knows the story. Just tremendous stock. 137 is the marker, and it's trying to get right in front of earnings. It breaks that, and you got a new stock. I mean, how this stock moves at $500 billion at a clip, I don't know. I'm not here to tell you that it can't anymore. This is incredible. It's a $2.25 trillion. I don't know, $2 trillion company. It's, this thing goes from 135 to 155. You're talking about a 15% move on a stock at 2.5 trillion valuation, 2 trillion. You're talking about another 300 to 500 billion dollars just on an earnings. Wow. This is incredible times. I mean, it used to be maybe a year ago, people were asking, how long is it going to take for Apple to be $1 trillion company? Who's going to be the first $1 trillion company? Now they're making that in 2 days, 3 days, they're making $1 trillion. Right. So, it's incredible. That's all I'll say about that. But these big tech names are, again, starting to pick up options to the upside. People looking at earnings in the next couple of weeks on a lot of these names. That's something to look at. So I would say that one name that, moving back towards one that I saw was Coca-Cola. Yeah. So let's see. Yeah. Coca-Cola. Did you see that today? Coca-Cola?
Yes.
So Coca-Cola is interesting. So Coca-Cola, let's look at the chart of Coca-Cola first, because I like Coca-Cola and it burned me. It didn't move up as fast. I went down first and moved up and whatever. I don't like it. But, here, this is trading. Forget this for a second. This is trading incredibly well. Like, this is floating up, floating up, floating up. And then all of a sudden, it starts doing this. And remember, when we're looking at this, if we're looking at this as it goes up, once it breaks 51, right, and it goes through here, this is a breakout on good volume. So you see the good volume here, right? Good volume. It breaks out. Here, you want to see, you see how this level, this is resistance? Okay.
Yep.
Let's actually draw the line so people just, we want to mark what we're looking at. We're looking at the stock. It does this. Great. It's now trading well. This is the level. This is now support. It reaches support and the buyers come in. The same buyers over here, they come in and they push it up. It starts going higher here and we're looking, okay, this is the next level. Goes here and then all of a sudden trades lower. That's not a problem, especially if you're owning stock. If you own stock, it's not a problem. But once it starts trading here and it's trading higher volume, you see the volume started to pick up here and it's not trading well. I was thinking about, okay, I like Coca-Cola, maybe the restaurants aren't going to open up ever again, but they make a lot of money off, a good percentage of money is made off of restaurant sales. But if the stock is not a lot of volumes coming out, and then the stock is right at this level where we were looking for sort of support, and it breaks that support, then this becomes resistance, and you can see drops higher, resistance lower. I'm staying away from this stock. But today, okay, so I watched Coca-Cola, and first of all, Coca-Cola shouldn't trade like that. It shouldn't trade 55 in 3 days, or in a week and a half, 2 weeks. In general, it doesn't trade like that. But today we see something right in the morning that I just thought was interesting, that someone comes in and says they actually made earnings. This says 21st, but now the earnings are on February 10th. They were confirmed. So this has to get changed. It'll probably change tomorrow. So February 10th. And then you see in the morning, they came in with 16,000 options here. So let's see what they did. Looking at this, you see 7,000, 7,000. So clearly this looks like there's something going on here. What did they do? Well, at the 49 level right here, the 49 calls, you see 5,000, and then you see 2,000. The 5,000 look like they were bought here, right? At 943, they were bought at around, let's just call it $1, just to make easy math, $1. And then they're bought there right in the morning. You see the implied volatility is up. And then this one, 46, looks like they sold the volatility lower a little bit, and it looks like they sold it at 35 cents. So $1.35. So they paid 65 cents right at the get-go, right at the get-go. They came in and said, you know what, I want to buy this. Now, the stock, we saw what the stock did, right? The stock was doing, where's our stock? The stock does this for 2 weeks, and then they announced that, okay, earnings are going to be on February 10th pre-market, and now somebody comes in right in the morning and says, you know what, I want to buy it. Probably some of the same long-term holders who said, okay, this is getting ridiculous. Coca-Cola shouldn't trade like this. This could probably trade back to 51 like that. So let's sort of get long a little bit here. Instead of buying the stock, because we don't, again, they're gonna say to themselves, the stock has been trading very weak. We don't know where the bottom is, but we're really comfortable paying 46. Okay. So we're really comfortable paying 46. And right now I can buy these for 60 cents at basically, instead of buying the stock at 49, I can buy these options and this type of strategy for 60 cents. That's a great trade for them, right? To me, that's a great trade, because if they think it's going to 51, 51 to 52, or back up towards that level where they were, you're talking about $2-3, 60 cents to make $2-3 is, $1.40 up until 240. So, $1.40 on 60 cents is 233 again, that magic number, 233% gains. And at 240, it would be 400% gains. So, and all they have to do is say, I want to own the stock at 46, and they have an enormous amount invested in Coca-Cola. So this is just a trade that adds on to their portfolio. Does that make sense? Right. I own, this is 700,000 shares. I own 1 million shares of Coca-Cola already. You know what? I'll take a shot right here. Now, if I have to own 700,000 more at 46 for the long term, I'll do that. Not a problem. Do this trade. Right. And then we can figure out what we're doing with the stock shares of 51, whether we would just want to take a little bit of profit, or we just want to exercise it there. But I'd like to get involved here with Coca-Cola, and I think this is a good price. So cool. That's something to think about. And nice. Go ahead. You have any questions?
Yeah, so I just wanted to give you a question to wrap it up, but before I do that, I just want to thank everybody for being here and, subscribing, watching us. We've been growing slowly. We noticed we have a tight crew that watches us every day, and we really appreciate it. And we also saw that 50% of our viewers aren't actually subscribed. So if you're not subscribed and you're watching, please subscribe, and then you're going to be able to see us every day in your notifications. And you can follow along, find some great trading ideas, share this with your friends, like, comment. We appreciate all of that. So now the question of the day is earnings. Now, we've been looking at these for a couple of days now, and all of these have earnings. Almost all of these have earnings. And I'm thinking, for example, in GM, you sent out a longer term claim. I think it was June, July, and earnings are coming up. So people are probably wondering, what should I do now? What's going to happen with earnings? I made some money. Yeah. Do I let it run? Do I sell some?
Sure.
How should somebody,
So in that question, context, rules the day, right? There's no clear answer for every situation. There just isn't. And it's important to understand that, if here's one context, General Motors, we have a longer term play. We have June. What's today's date? It's January. to give you a sense of how I'm thinking about it, so we understand, when I'm going a little bit longer term, okay, it is trying to prevent this 3% pullback in the market. Everybody stop, because you buy shorter dated options, you're going to get stopped for faster. Okay. So what I'm trying to say, or what I'm trying to voice with my actions, is I don't know where the market's going. The market goes up every day for 3 months. It could go down for a week, and that doesn't mean I don't like any name anymore. It just means that that we're finding good risk reward here. I don't want everybody to get stopped. I might use a little bit more time so we don't get stopped, because I think it could be that good, right? And something like General Motors, you've made some money in General Motors. I don't want you out of General Motors completely. The reason we have a 6-month option is because I think General Motors, like, the thing is, I don't want to be out there acting like a crazy person saying, I think General Motors can hit $80 or $90, because then people go, you're nuts, you're crazy. So I try to just say what, looks pretty good. But the reality is, in a big momentum game, nobody knows where it can go. And General Motors has the key inputs, the key elements within the company that, man, there's so many positive things that people could attach a big story to and make it go. And so they announce a spinoff, and you're going to see things, that's all people are going to talk about. They're going to talk about the spinoff of Cruise. How much is Cruise worth? Cruise has got to be worth, if Microsoft paid $30 billion and they only got a small percentage, it's got to be worth a lot more. And they're going to start throwing the numbers. And again, this whole, we talk about momentum is about not having finite numbers, not having, real numbers. It's this thought of what could happen. Well, that's what happens. So when there's earnings, there's going to be earnings coming up. It's, if you wanted to take a little bit off. So if in this case, we were probably able to take off 1 slice, 2 slices, 3 slices, I would say, the stock is trading really, really well. It's trading very, very well. And you have 6 months, if it goes back to 40, just because the market comes off, what would I say? I would say, man, you did great by taking that off. You see how you took that off? Now you get another crack at the bat here with the stock going to 40. Like, you can get back in. It's not a problem. Maybe you do a call spread this time just to lower the price, because you know what? You don't want to give back what you made. So all these things come into play. What is the market doing? What are EV stocks doing? If Tesla trades from 900 to 400, then I would say General Motors might not make the $80, $90 dream level. But, so it's all context. What's going on in the market, in the sector, in the space, in momentum. But it's above all else, above all of that, it's always, if I tell people, if in your mind you are asking yourself, should I take half off here because there's an earnings announcement? So maybe in the context is you only were able to take one off at 100%. And the next one is right now at 150, 160. And earnings are tomorrow. And now you have 2 lots out of 3. And now earnings is either going to knock this down to maybe a loss on those 2, or it's going to take it way higher. And you're worried and you're concerned. Again, context is the expiration 3 weeks after this earnings. Were we playing this earnings? Like, is this what we've been looking for? Or are we playing a much bigger trends where earnings may not matter as much, which in the case of GM? So you're trying to figure out, what were we playing for? Now, in the case that we're playing for that earnings and you have 2 lots left, I would say, if you're even asking yourself the question, and probably you are, it's okay to take off half. It's okay to take off that 1 and let 1 ride. So you took 100, you took 150, and now that last third, you say, you know what? I paid for the earnings. You paid good money to see those earnings. That's what the hedge fund guy is looking. He paid the money to see those earnings. So you better believe that if you have a chance to see those earnings, then take that chance. Take that chance with the 1 lot, because that 1 lot could turn into a 500, 600, 700% win, which takes your average from 1.25 all the way up to 225, which is where you want to be. So this is context. We're trying to, you don't want to lose. If the earnings are bad and 2 lot, you turn something that was 100, 150, and then 2 lots, that 150 goes to 20, or 0. Now you're actually down money. Then you just took a winning position that was fantastic into a losing position. And you don't really want to do that all the time. Some people say, you know what, I'm just going to let it go the way it goes, and that's fine. But there's a lot more volatility. So it always determines, when I speak to someone, I say, who is this person? Is this a conservative person? Is this a guy who's willing to take the shot? You know, how much money is he playing? Some people have, you know, that I talk to have $1 million portfolio and they want to play with big money. I say, you could do a lot of damage with $50,000. You don't need to be $500,000 just in options. So, you know, I try to help people manage and say, what's your goals? What are you trying to do? You know, and when you get to a situation like this, it's the answer is going to be different for everyone else, for everyone that's involved. And lastly, I would say that I am very careful. And I tell people to be very careful at how you have to, in this game, okay, you have to babysit your mind, okay? You have to actually, it's a psychology game too. At the heart of this game is psychology. You have to babysit your mind. And what does that mean? That means, how are you going to feel if the option goes to zero tomorrow? Because bad earnings, and it happens, the stock drops $20 and your $2 option went to zero. How are you going to feel? It's important to understand how you're going to feel. People like, I don't know, you know what, next? No, it's not. It's important to understand. Are you going to feel bad about it? You're going to be angry at yourself. You're going to start you're going to be questioning yourself. You know, what's the plan? What are you going to do when it's down right off the bat? You're going to hold it and then try to wait, because, by the way, that causes anxiety too. Stock's down 20, the option goes from, you know, $4, $5 to zero, or to 30 cents. What are you going to do? Are you going to be the person that says, I'm just going to wait, maybe it's going to come back now? And now every single day you have that negative feeling of, oh man, it's not back today. Bam, I'm down now. Now I'm down another 10 cents. Now you're worried about going from 30 cents to 20 cents. I'm down another 10 cents on an option. It's all who the person is. The person doesn't care, then the person doesn't care. It's fine. That person, I say, you could take the volatility, but it's the person who cares that you really have to babysit your brain and your mind to say, I'm going to really care about that, or I don't want to lose this time, or you know what, I do say, if you paid for earnings, you want to see it. If you have 10 options and you have 6 left and you're very nervous, then I would say just keep 2, then take out 4 out of the 6. But keep something because you paid for it. And then, by the way, there's also negative feelings that if you sell too many or you sell it all, and then the thing goes to 800%, then you go, why did I do this? Why this and that? So it's a psychology game. That's why I tell you, try to have rules, try to have good rules. I'm not saying you have to stick them to the T to every single moment, but have good rules and understand who you are, understand how you're going to feel. It's very, very important. Okay. So
yes,
there's no clear answer on how you do it in front of earnings, but if you're starting to asking yourself those questions, I say all the time, it's okay to sell a little bit or sell some, but you have to understand, are you going to feel bad? Are you going to feel bad both ways? Like, how are you going to feel?
Okay? Right. Yeah, it's all individual. For me,
you're going to feel bad both ways. Stock goes up. Oh, I should have kept all of them. Stock goes down. Oh, why did I keep them? So,
and a lot of that also depends on, for example, that you told me this the other day. So, for example, if I hit 300%, then I'm able to, lose on a particular number of options. And if I've hit those percentages and I can afford to lose now, why not take that bet and, aim for those higher gains on the earnings?
So what you said is, and I say it to you always on the side, because I'm always drilling into your head. You make 300% in GM. You think that's going to happen on every option? You're absolutely out of your mind. I actually, when I coach people, it's one of the main questions. And one of the things I have to, either the person understands or it doesn't. And if you can't understand that from the get-go, then there's no coaching you. You're not going to win it. If you think you hit a 300% winner and that's what you want to hit every single time, it's just not going to happen. And so what you should be thinking is, this is how you should be thinking. I just hit a 300% winner. And now I get to play 6 more times and I can lose. I'm going to lose probably 3-4 out of those 6 times at 50%. That's the attitude. That's a positive attitude, as opposed to I'm going to win 300% every time, and you're not 80% of the time. So then 80% of the time you're going to be upset. If you got to reverse it. The person who wins at this game reverses it and says, I just made 200. That means I can make 4 more new bets and lose potentially 50% and be okay. And I'll be happy because I then took 5 shots and now I'm still playing this game, right? Because there are going to be times where you hit 4 in a row and then it compounds, right? It's like it feels better than, you know, striking fire on a deserted island, right? You're just like, this is incredible, but you know, the math is the math, and ultimately release. But you got to babysit your brain and keep it going, and switch that mentality to a positive thinking where I won big on this. Okay, I'm probably gonna lose the next 3, 4 out of 5, but I gotta find 2 winners in the next 5. Then you make a lot of money. Changing that perception is going to be a lot better than, God, I just lost again. I tell people, you just made 300% on one. Yeah, but I just lost 2 in a row. It's part of the game. Okay, it's part of the game, but it's a psychology game. Okay, yes. There's an element, a good part that is psychology. So that's what I would say. There's no clear-cut question, but I think it's very much something that people struggle with. You know, people, they love me one month, they hate me the next month, they love me the next week, they hate me the next week, all the time. Why are you doing this? Why are you doing that? Listen, it's a longer term game, and what we're doing, what I'm showing you here, just look at what we've done. We haven't, you know, for the people that are on this for the last, we did 20 episodes. This might be the 20th episode. You see what we're doing. We're following certain names, and I would say it's been pretty damn good. You know, and we're getting a lot of emails saying people excited. So, you know, that doesn't mean it's always going to be good. At some point, this thing's going to turn, and I'm talking to people actively about, you know, ways to think about hedging with Amazon, Microsoft, with the big names, you know, looking strong. You know, I'd rather buy longer term calls and wait for the turn and then jump in hard for the puts. It's sort of, I don't want to keep on asking people to buy shorter term puts. You know, this market hits, I haven't straight away. This market hits the high 80s going to 90. That's where I think 90 could be a big level here. You know, I'm going to tell people you gotta hedge here a little bit, a lot. You know, I want to see that. So look, it's all, we're looking at the board together. We're trying to find opportunity. There's a lot of risk reward. There's a lot of moving around. Look, I'll show you one, because it leads me to something where I will show you. We have been, let's go to, we have been talking about, maybe we'll end it like this, and then I actually got to get out of here soon. So we're going to end it here, maybe take one question. Here's one that I saw today, and we had something, a video we talked about a week ago. We talked about Plug, Blink, and Neo, right? A week ago, we talked about these names. Today, I see this trade in CSIQ, okay? 3,000, 3,000, 3,000. This looks like someone sold calls, bought puts, sold puts. That's the trade. Who does this type of trade? Again, someone like a BlackRock would do this type of trade, where they're hedging. Meaning they own stock, but they're willing to sell this one, 70 calls at about $5.50, and they're willing to buy this put spread, 60-45 at about $5.50. That's not bad. You know, if you bought the stock at $20, $30, this is what I would be advising major BlackRocks and the major companies. You're long from 20 to 30 on 1.5 million shares, and it just hit the new high here. Could still go higher, but just manage your position here. Just manage some risk reward. Sell these calls. You can buy this for $5.50. So you put no money down, and now you're protected from 60 to 45. Let's look at CSIQ real quick. You're protected from 60 to 45, and you got to give up 70. Okay, so you got to give up 70, which is probably where you're going to give up stock anyway. So this looks like a great trade for someone who owns stock. The reason I point this one out, not because this is the UOA that we're looking for, but this is a clue, and it goes with if we go back to, you know, a week ago, we're seeing Plug. 1 week ago, we were seeing the same type of trading with Plug when the stock was around 70. Okay, stock was around here, 67, 70. And what were they doing? They were basically doing these longer term trades, right? We were talking about them buying a little bit longer term trades. You spotted this. They're buying longer term trades, and you know, it's a form of risk reward adjustment. And we talked about how, you know, people might be, they're buying these trades because they might be getting out of a little bit of stock. Not all of their stock. They don't just like blanket sell everything right away, but they're getting out of a little bit. So we saw the same thing on the same day right here, 52. The stock's been under pressure for the last 4 or 5 days, and we saw them coming over here, and we pointed that out. They were switching the risk reward. They were buying longer term options. How about Neo? How has that been trading the last 5 days? All of it isn't trading down in the last 5 days. But before it traded down, the same thing I said earlier today, they're setting things up, right? They're looking at it. They're looking at their risk reward. Not that they're getting out. They're just simply saying, you know what? We're going to be selling some stock here. Why don't we do a little bit of this trade just in case it comes off? Same thing with QuantumScape, right? They did that trade here. And look where it dropped. And this is the mountain. Look, here's, by the way, I haven't looked at this in a while. So here's the mountain down. You know, again, this is, they were probably going to be starting, the shorts are probably anywhere from 75 to 85, start pushing. It never even reaches, like at 75, it goes from 75 to 45. So this is under control by the shorts here now. It's a different game. This is momentum, right side, left side. So why I show you some of these names, not that I think it, you know, I just think that this is a signal that the big boys are managing their risk reward on some of these big energy names, whether it was Blink, Plug, Neo in the last week, whether now I see a CSIQ, you know, so you might, when you see these types of trades, buying call options might not be the play because they are signaling that if it gets any higher to 70, I'm probably going to be selling some stock too. So you need to find the places where if it gets to 70, I'm buying more. I'm going to keep buying more. They're now in the mind frame of if it goes higher, I'm going to be selling. That's all I'll say for today. And okay. Let's take a question.
Great. Yeah, I actually, instead of a question, let's just look at this one particular one.
Go ahead. Which one?
Go to the new options chain and type in QTT.
QTT?
Yes. This
never heard of it in my life.
And look at the volume. It looks ridiculous. There you go. Like what?
Interesting. What are you showing me? What is this?
Right.
He said, with QTT.
He says it's a trash Chinese stock.
Things to know about the Chinese mob headline. Reports third quarter. Okay. Well, $2. It's an option. The stock is an option. What are people buying options on the stock for? It's insane. Like, you know, people trading the stock. So it just shows me that it's massive. Look at this. And the market. Yeah, I mean, what can I say about this? Why buy options when the stock is $4? We pay $3.50 for an option, and it expires in 2 months. Here, you want an option? You think this can go up? Okay, pay $4. What do they think the stock's going up forever? I have no idea. I don't even know what they do. But let's see weekly. I'm just gonna, you know, Chinese $2 stocks. Man, this is getting fluffy. When people start showing me this, it's like it's getting fluffy. I'm telling you. Okay, so I don't even know if it's the same stock, but this is a stock that's gotten drilled. Now it trades $4, and it's an option. That's what I'm going to say. I can't spend any more time on this one. It's an option. They are buying. It looks like they're buying the 250 vol. It looks like they're buying the 5 calls, the 7.5 calls, 50 cents, 47,000 times. So, you know, you talk about how many people, this is probably something being talked about in Wall Street Bets is my guess, or Robinhood, because you have a million traders. Now they're buying stock, but they're also buying, they're buying stock, but they're also able to buy 54-cent call night because it's quote unquote cheap and cheap bet. And they're going to play this until the stock trades back down to $2 and nobody talks about QTT ever again. But I don't, you know, this is also, if you wanted to investigate, by the way, you would go back in time and see, is this the first day that you see an open interest? It looks like it. Options trading. Did you see anything before? But if this is a name that is heavily shorted or shorted by the computers, again, the puppet master, we talked about this yesterday. If they want to attack a name, you know, one of the ingredients to attack is a big short base. And something like QTT is probably not at the top of the big short names, meaning like the big hedge fund names, but a lot of computers, a lot of the quants, they're in there shorting these names because usually stock from $2 usually goes to 50 cents, you know, but in the meantime, it might go from $2 to 30 by the time this is done. So one of the ingredients of trying to capture, you know, before they tell the Wall Street Bets crowd is, you know, let's find a stock with a story, easy to tell, has a big short interest, no following, and we can push it with 100 million shares or whatever we want to push it with. So that's all I would say. I don't know anything more than that. I have no idea. I wouldn't recommend it. options in it, I would say buy the stock if you wanted to play around with the stock if you want to play. All right.
Okay, cool. And let me just ask you this real quick. Last question of the day by Tony. He's asking what percentage of the winning picks premium, the ones you sent out, are based on UOA?
I would say at some 100%, because Felix Fry doesn't know anything about stocks, right? We're talking about a process. So I'll give you a perfect example. I mean, I'll give you one that was very easy. I like Target. I've always liked Target. I've been telling you about Target for a year now. I love Target. Just because Felix Fry loves Target, there's no reason to tell everybody else go buy Target. So in Target, we had I was telling people I love it. I go to the store. What a great experience. What they're doing, the omni-channel. This stock should trade higher. But that's just my opinion. That's just me. The winning picks is about finding opportunity when we see the options buyers come in. And that's my clue. So I call me a jack of all trades on a lot of stocks. I know a little bit about a lot of stocks. I know basic trends that are happening. I know which trends I like. I've loved the social media trends for a year and a half. I just love what's happening there. And I love like a Pinterest or, even Snap now a little bit more. I love when TikTok is going to, come in and Walmart jumps at it and they want to be involved. These are things that, bigger pictures. It's part of the reason why I like ZNGA long-term, bigger trends. But when we see the volume, that's the tip off that somebody thinks right now is the opportunity. So in something like Target, while I loved it, I'm always watching Target, unusual options. And when it hits, then I say, okay, I love it. I know the story. And now they think it's a time. So same thing now with these big tech names. I love the chart. I'm looking at that chart. I see it's pretty bullish. I see call buying in the big cap tech names. And I'm thinking, man, these look pretty good for a shot here. The Microsoft looks pretty damn good, and it's done nothing for 6 months, and maybe it wakes up here and takes off. This is how I think. So the winning picks premium is all about UOA and finding it, analyzing it. As we do here, we analyze a lot, and then I may not do it that day. I may wait 2 weeks, a week, but it's in my mind. I'm looking for a pullback. So it's a combination, and again, it's really what people pay for is my time. That's what I said, my time. You can watch every video you want and get 5 or 6 trade ideas a day. Some ideas I like better than others. So that's my little 2 cents on the UOA, because at some point I have to make a decision. At some point, by the way, the other value in the UOA is trying to manage, because people are not managing, if we have 5 calls, 6 calls, even though I tell people, hey, put in a put. You don't need me to tell you. Sometimes I don't know exactly what everyone's position is. I have an idea, but we're trying to just manage it. I'm starting to buy a little bit longer term calls because I'm signaling that I'm nervous that I like the market. I'm trying to be tentative here. I don't want to just reach, because you get one day and everybody's going to get hit pretty hard. So that's what winning picks offers. It's experience and my time.
Okay, good. Thank you.
All right, Marko. Be good. I got to run. I got to go catch another meeting right now.
All right. Sounds good.
All right. I will talk to you later. Be good.
Thanks, everybody. Bye.